Happy Monday. We attempt to rebound this morning 30 minutes ago until the start of your cash equity trade. I'm Danny Berger.
And I'm Isabel Lee. Open Interest starts right now.
Coming up on the show, China's Moonshot is reshaping the AI race just as big tech heads into a critical earnings season.
Meanwhile, all whipsaws as traders weigh a possible ceasefire against escalating tensions in the Middle East.
Plus, Boeing maps out its next-gen jet. We're going to hear this hour from the CEO of its rival Airbus live from the Farnborough Air Show.
Let's look at some stocks, Danny. Happy Monday. We're so glad you're back. There are a lot of stocks to look at because there are a lot of things happening. I mean, first, the tech trade higher today amid concerns that China is producing cheaper and more efficient AI models. On Friday, we saw the Moonshot fears that replayed some deep-sea panic, and that's creating a new challenge because big tech companies are spending billions in AI. So this week, we'll hear from Google parent Alphabet, Tesla, and Intel, among others. But for now, you're seeing green on your screen. Micron higher by 4%, SanDisk higher in pre-market by 3.5%, and NVIDIA higher by almost 2%.
Yeah, we'll see how the market reacts to those Alphabet Capex numbers. It's going to be really interesting and maybe very telling for this market if that rally can continue. Boeing also climbing, Isabel, in today's session. The CEO told Bloomberg that the company is turning a corner when it comes to supply chain hurdles. It's ramping up production, so it needs that. China's SMBC Aviation also announced an order of 100 Boeing 737 MAX jets, and Isabel will continue that conversation with the Airbus CEO later this hour.
Let's get back to China's disruption in the AI trade in recent days. For that, we're joined by Bloomberg Executive Editor for Global Technology, Peter Elstrom. So, Peter, how do you read this moment? Do you think that it's a DeepSeek version 2, or do you think it's something different? Because now a lot of the tech companies kind of had an idea of what a DeepSeek could do, but this is Moonshot, and maybe it's something new altogether.
Yeah, I think the tech companies in the U.S. in particular thought they knew where the competition was coming from in China, and this was a bit of a surprise. We had seen the DeepSeek moment last year, as you had talked about. There were some other players that were kind of prominent, including Alibaba, the e-commerce company that has a strong model, and Gwen in particular. But then over the weekend, we got this news from Moonshot that they had introduced Kimi K3, which is a very powerful model. It outstrips most of the frontier models on many parameters, except for the two leading ones from Anthropic and OpenAI. So it's a very strong performer. It has 2.8 trillion parameters, which is sort of like equivalent to brain synapses. It's a very powerful model. And I think that surprised people that there was yet another Chinese company that was able to come and compete with the best from Silicon Valley on a number of parameters at cost that people really don't understand at this point. Many of these Chinese models are also open source or open weight, so they're much less expensive. They're offered very broadly. If you don't want to run them on somebody else's computer systems, you can run them on your own. Also, you can take the model and then run it so that can avoid some of the security concerns around Chinese models. But it is a very serious threat for some of these frontier models in the U.S. that had been planning on charging premium prices. Now there may be some pricing pressure on what they're able to charge their customers, and that may make it a little bit more difficult as we see OpenAI and Anthropic try to go public in the near future. Both of them want to get valuations that are above $1 trillion each. That may be a little bit more challenging today.
Right, and it challenges the whole Capex thesis and the whole AI stack. Peter, Isabel made a really good point earlier when we were talking on our pre-show call, basically comparing this to BYD. I mean, BYD, you have this Chinese technology that's just as good, as not better, than other EVs in the U.S., and it's cheaper. But notably, in America, you can't buy a BYD. Do we hear any noise coming from government officials about trying to curtail the usage of some of these Chinese models?
There are questions about this. I mean, you make a very good point. China has been able to compete in a number of different areas, not just electric vehicles, but also solar panels, steel, for example. So you do have some of these historic cases where in different industries, Chinese companies have come out, they've been able to do things at much, much lower prices. Yes, that is happening in AI models right now. And you've got a whole series of them, DeepSeek, Moonshot now, there's Minimax, there are others that are coming out with these less expensive models. And there has been some discussion about whether we should try to bar those companies from competing in the U.S. I think the challenge there is that you may be hurting American companies by forcing them to use more expensive models or less capable models. There are open source models in the US too, but I think when you look at the leading edge of open source right now, these less expensive models, they're really Chinese companies at this point. So if you take away a tool that companies want to use to be able to incorporate AI into their businesses, you may end up hurting American businesses that are not the AI leader. So you may perhaps help the AI frontier companies, but you may punish other companies in other parts of the economy.
Peter, so interesting. Thank you for your coverage. That's Bloomberg's Peter Elstrom. Now, concerns around those cheaper AI models also come at an awkward time for Mag 7 companies reporting earnings this week. Investors are going to be looking for proof that billions in spending for AI are paying off. We're going to hear from both Alphabet and Tesla on Wednesday. Bloomberg Tech host Ed Ludlow joins us from San Francisco. Ed, what are the expectations?
Yeah, there will be a short-term focus on capital expenditure, right? Imagine if Alphabet says that Capex in 26 will go beyond the $190 billion at the top end that it has already guided to. There would be a reaction in the moment on that. But right now, the thinking is very much that, like, look, overall, Google's revenue growth is 20%, its cloud business is 65%. And there's just a very quick move to see evidence that the spending results in something. Alphabet has a big backlog on the AI side and on the cloud side. So it's their ability to translate those capital expenditures to meet the demand and have really high top-line growth. And because this is Wall Street, right, in earnings season, bottom-line growth as well and how margins are impacted. With Tesla, you know, it's slightly idiosyncratic, but in aggregate, there is a very careful watch on not just the level of spending, but what it's being spent on, right, and what the AI story is with Tesla. In that case, though, you know, you'll know that I'm excited because this is the first Tesla call since SpaceX went public. Now Elon Musk is the CEO of two giant public companies. That's kind of interesting and slightly specific to them.
Ed, talk to us about the sentiment around these earnings, because I feel like these stocks are just priced to perfection. Even if they beat, they're punished. And then now, as Danny said, with this Moonshot thing, it really comes at an awkward time. Any metric or any sentiment you're going to be checking out for?
Yeah, I mean, Peter did a really fabulous job of explaining something that's been incredibly complex, but also like the market has really changed its mind every 24 hours since last Thursday night. You know, initially, the fear was very efficient AI systems will require less hardware. This morning, when we wake up, the opposite is true, right? They look at the reaction to Kimi K3 and also the news, frankly, big news that they had to pause subscriptions because their GPU capacity hit limits, to now be like, this is a massive driver of demand. On the inference side in particular. Alphabet's kind of analogous with that, right? You know, that they are still in a place where the market wants to see Capex as a signal of demand, right? The hyperscalers are saying, we have to spend this because we're compute constrained. We need to build more compute in order to meet the demand that's out there. They also still want to see big beats on the top and bottom line. On the buy side expectation, it's very high. You know, move past the sell side, and that's the calculus.
Ed, thank you very much. We're going to be looking forward to tech at 11 a.m. this morning. That's the Bloomberg Tech host, Ed Ludlow. And Ed mentioned there the crunch for compute, the competition for it. This just out from the information that Google is set to plan on a new chip that would be more efficient. It's called Frozen V2. The employees working on the chip reportedly say that it could be 6 to 10 times more efficient than their existing line of homegrown chips. Again, trying to take away or at least relieve some of the pressure on the chip and compute shortage that Google has been facing. Let's now turn to the Middle East, where Brent is wavering after reaching $90 a barrel earlier. Reports that mediators have proposed a 10-day ceasefire between Iran and the U.S. The Iranian president says the country is in a full-scale war with the U.S. and its sovereignty over the Strait of Hormuz is non-negotiable. But at the same time, Iran-backed Houthi rebels say that they are imposing a naval blockade against Saudi Arabia in the region. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Tyler, it is headline whiplash this morning.
It definitely is. And that latest one that you mentioned is going to be a stark escalation, Danny, as we get this confirmation from the spokesperson for the Iranian-backed Houthi militia group that they are planning to immediately implement this maritime blockade against Saudi Arabia. We should keep in mind the broader context here that we can't only see this through the lens of the U.S.-Iran war, that this is also related to a truce breaking down between Saudi Arabia and the Houthis from 2022. We've seen this exchange of fire between the two sides, but this is definitely the farthest that we've seen that specific thread go, considering that we know Saudi Arabia has been relying on that east-west pipeline to move supplies to the Red Sea to the tune of about 4.5 million barrels of oil per day. And last week, we did have Iran ask the Houthis to be ready to deploy assets to actually shut down that shipping route. So we knew that there was action in motion to prepare for this. So we'll have to see if it actually ends up getting imposed and what those ramifications are going to look like. Because Danny and Isabel, at this point, commercial traffic, at least observable transits, are at a basic standstill, according to new satellite imagery that was analyzed by Bloomberg News. And adding to the risk, it appears that vessels that are moving through with their transponders off are also being targeted. We had the IRGC over the weekend saying that they halted at least 4 ships that had turned off their radars completely. And keep in mind, that is the way that most of these ships had been trying to make safe transit through the waterway.
All right, Tyler, thank you very much. Bloomberg's Tyler Kendall in Washington, D.C. Let's get a check on markets, because despite that headline volatility, that back and forth, Brent crude doing a whole lot of nothing, just holding at $88 a barrel. It was at 90 earlier. S&P 500, that's up about 0.4% as the Nasdaq outperforms a bounce back after the worst week for chip stocks since Liberation Day, as 10-year yields move higher by 2 basis points. Isabel, some of the movers on our radar this morning, we got some consumer popcorn and pizza. Domino's and AMC both reporting strong earnings for the second quarter, seeing steady growth that beat the average analyst estimate because everyone went to go see Oppenheimer in the rain this weekend.
I didn't.
Not Oppenheimer, sorry,
no,
Odyssey.
Odyssey.
They're both Nolan, right?
Yes,
and
they're
start
both
with
Nolan.
O's. So.
There was a meme that said, "I'm more afraid of people who went there at 7 a.m. than 3 p.m." Anyway, a data center operator, Iran, is surging after raising its annual AI cloud run rate revenue target to more than $4 billion.
And let's just get another check on Google, because again, we learned just moments ago, the information reporting that they're building a new server chip tailored for Gemini. The idea, make its AI models more quick and more efficient, which means the compute crunch is less of an issue.
And coming up, Boeing plans to make 40,000 planes in the next 20 years as it ramps up production. We hear from the CEO next. This is Bloomberg Open Interest. Now to high interest, a look at what's making headlines around the world. Andy Burnham has officially become the Prime Minister of the UK after meeting King Charles III. In his first speech after taking over the role, Burnham pledged to end the UK's political instability with a new economic model.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support.
Secretary of State Marco Rubio says Chinese President Xi Jinping's upcoming trip to America remains on track. His comments coming days after President Trump claimed that China interfered with the 2020 U.S. election. U.S. intelligence agencies have previously debunked these claims. And Boeing says it will need until the end of the next decade to bring its next-generation single-aisle aircraft to the market. Speaking with Bloomberg's Guy Johnson at the Farnborough Air Show, CEO Kelly Ortberg said the company isn't ready financially to launch the new jet. He also weighed in on the company's turnaround plan.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong. So our backlog is very, very strong. So our story is really focusing on executing that backlog.
Joining us now at the Farnborough Air Show is Bloomberg's Guy Johnson. Guy, wonderful to see you, and I know you conducted that conversation. Did you get a sense that they were being a little bit conservative, given that Airbus, who I know you're also speaking to in a few moments' time, seems to have a swifter timeline?
Yeah, maybe. But he's saying basically we need to get the finances in order. This is an incredibly expensive product that he's going to be producing, and hitting the market at just the right time is going to be the key for Kelly Ortberg. Yes, Airbus is maybe talking about a few years earlier in terms of the timeline. But the real question is, it's not really up to Airbus and it's not really up to Boeing. It's what the customers want. And they're saying at the moment what they would really like is actually the current aeroplanes that are flying now, that are having engine issues, etc., problems with the Pratt & Whitney. They want those to be fixed. They want those to work better before they're prepared really to push forward with the next generation of aircraft. Danny, the other thing as well is that there are huge order backlogs right now for both Airbus and Boeing in terms of the narrow body story. I suspect that both of those two companies would like to get those aircraft done and sold and out of the door before they maybe make that move on the next generation of aircraft. It's coming at some point. The timeline, actually, quite hard to tell at this point when that's going to be.
Guy, talk to us about the timing, because that's also tricky too. If you introduce a model too soon, some technology might not be ready yet, but if you introduce it too late, then you might risk ceding some of the lead to some manufacturers.
Well, the key issue here probably lies around engines, and that's the big debate that is taking place here at Farnborough, is what kind of engine are we going to see on the next generation of aircraft? GE, Larry Culp, would like to see an open rotor format. Looks like a kind of old school propeller on the aircraft, but we're going to wait and see whether or not actually the customers, the airlines, actually want that engine to be on the aircraft. Is it going to be worth it in terms of the benefits that are going to come through from that? So there's some really key decisions that need to be made in terms of the form factor, because if you've got a big propeller, you need to lift the wing up, you need to lift the whole engine up. So there's some really big decisions that need to be made. At the moment, nobody's quite ready to make those decisions. But yes, it is a big financial commitment. The technology needs to be ready. Everybody is looking for this decision to come at some point. Probably doesn't come at this show, but I have to say it's what everybody is talking about here at Farnborough, is when do we get that decision made? When does that new aircraft start to arrive? And will it be Airbus or Boeing that goes first?
Guy, we also heard from President Trump last week, who was announcing a new investment in the defense industry. And within that, he was praising Kelly Ortberg specifically. How has the relationship between Boeing, between Ortberg, and the U.S. president been evolving?
Oh, it's been... The president has been absolutely instrumental in terms of the help that he has given Kelly Ortberg in putting Boeing back on track. So Kelly will have been in the job 2 years come August, and he's been able to turn around Boeing relatively quickly, in no small part because of the support that the White House has delivered for Boeing. That has been a big factor, and he recognizes it. He says it's less to do with the operational performance of what has been turned around at Boeing in terms of building the airplanes, but in terms of sales and getting commitments to new aircraft sales, the president has been absolutely front and center. So yeah, it's been a really tight relationship. It continues to be a tight relationship. The president sees selling airplanes as being one of the big ways he can deal with the trade deficit, and it looks like he's going to continue to provide that support for Boeing.
All right, Bloomberg's Guy Johnson, thank you for bringing us the latest on that sunny location. It seems like it's a fun day, and in a few minutes, we will return to Farnborough for an interview with the CEO of Airbus.
I think the UK hasn't had rain in like months.
No, Danny.
I know you look at them and you're like, why is Guy always standing in a sunny field for Farnborough when it's the UK? But I think they have
every
an issue.
Weekend it's rained here in New York.
It's true. Well, at least they have a new prime minister now. Coming up, we're going to talk to Moneta's Aoifinn Devitt on the big week ahead for tech earnings. This is Bloomberg Open Interest. Tech earnings this week will give investors a clear picture on AI spending and return on investment. Alphabet, Tesla, Intel, and IBM are among those reporting, and they come amid Chinese firms putting pressure on them with cheaper models that threaten to hurt the momentum in the AI trade. Alphabet's Google was already under pressure after delaying the release of its latest Gemini AI model due to underperformance. Let's discuss with Moneta Global Wealth Managing Director Aoifinn Devitt. Aoifinn, how important are Capex numbers going to be from Alphabet? And do you have any sense how the market will even treat them?
Well, I would say that just like IBM got the bad news out of the way early, and now we've at least a preview of how investors are likely to behave when numbers are underperforming, I'd suggest with Alphabet, if there had been bad news to get out of the way, they would have done a similar path. So given they have not done that, I would now expecting that they're more in line with expectations. Capex, I expect, will still be as expected because that is very little has changed in terms of these type of long-dated contracts. I think what is not clear, though, and there's tremendous uncertainty around that, is the return on investment point. I think we know that spending is still happening because of this arms race to get ready for what AI can do to productivity. I'm not sure that we have clarity about what the return on that token spend is.
Aoifinn, you described this as a potential SaaSpocalypse moment. Can you talk to us about the winners and the losers in this new era that we're entering?
Well, the SaaSpocalypse, of course, refers to the suggestion that many software companies would be undermined by the readiness of AI to essentially do all of those functions and circumvent the middleman. What we have seen, though, is an increasing concern on two fronts. One is around that middle layer. We've seen Satya Nadella, we've seen Alex Karp come out publicly and suggest that that giving away of company alpha is something that is very dangerous and that no company should wish to do. So that's now raising the essentially the apparition that we will not have a wholesale SaaSpocalypse going on in that domain. What I mean, though, is the concern today regarding the Chinese companies taking the place of the frontier models in many, many functions. That, because of the massive underpricing that could then occur, that gap that would evolve, that could be the apocalyptic moment for many of these mainstream hyperscaler stocks.
Aoifinn, just 30 seconds, and we're going to talk about this more, but just quickly, does that mean you're avoiding some of these AI chipmaker hyperscaler names?
Well, I wouldn't say avoiding. We certainly are recommending Moneta that our clients are keeping their weight, their index weight there. But we are definitely recommending taking profits and not necessarily the old investment warning, expecting past performance to be indicative of future performance.
Wise as always. Aoifinn, again, we're going to continue the conversation. A lot more to discuss here. Aoifinn, Devitt, sticking around through the opening bell. And ahead of that opening bell in just 4 minutes' time, it is a market that's trying to bounce back after an ugly week thanks to a drop in chip stocks. So you do see the NASDAQ outperforming as yields move higher as Brent crude bounces around at one point at $90 a barrel and the price of gasoline in the U.S. above $4. We'll have your opening bell right after this break. Let's get this trading day started. You are watching Bloomberg Open Interest. I'm Danny Berger. A tough week last week gives way to a slight rebound this morning. It was the worst week for semis since Liberation Day. Isabel just pointing out to me moments ago that they're now in a bear market from their high, which was only a month ago in June. So S&P up 0.5%, NASDAQ up just under 0.9%, the Dow Jones putting in 0.2%. Down at the New York Stock Exchange, it is Coca-Cola. I'm going to be honest, they didn't have their feet up. They didn't put on their website who's ringing the opening bell, so this is a surprise to me. I don't know why Coke is ringing the opening bell, but they're all holding fun glass bottles, so good for them. That's cool. They're all going to be caffeinated. Down at the NASDAQ, Stars and CEO Jeffrey Hirsch, who's joined this program before, ringing the opening bell. They've been outperforming the small cap index and announcing and celebrating their new show, Fightland. I can't remember what it is, Isabel. I think it's like about boxers, but Jeffrey, when he came on, was pretty pumped about it and thinks that it's going to do very well.
It's probably about boxers because it's definitely not a rom-com. I only watch
Fightland. It could.
I only watch rom-coms.
Fightland could be about a couple that's like going through a divorce, you know, which I know is grim. Anyway,
that could be, but we just want happy ever afters here. And look at the green on your screen, Danny. Here are the stocks we're going to be watching. The tech trade is higher today amid concerns that China is producing cheaper and more efficient AI models. You see Nvidia higher by 1.5%, Micron by 3.5%, and SanDisk up by 4.5%. Last week, Bank of America released their fund manager survey, and the most crowded trade is, guess what, long semi. So I think this is definitely a vulnerable trade, especially this week. It's going to create a new challenge for big tech stocks spending billions and billions on AI. And this week, we will hear from Google parent Alphabet, Tesla, Intel, among others, going to report earnings.
All right, let's talk more about that because we also learned that Google reportedly working on a new server chip which would integrate the blueprint of its Gemini AI model. Apparently, it's going to be 6 to 10 times more efficient, according to staff in this information report, make things more efficient with compute. So Alphabet, that is up 2% or just under 2%. this morning. We're back now with Moneta Global Wealth Managing Director Aoifinn Devitt. Aoifinn, I want to pick up on where we just ended this about what you're recommending to clients. Maybe you take a little bit of profits, you don't outright avoid it. It's kind of this difficult thing, though, because if we're in somewhat of a stage of a bubble, be it beginning or otherwise, you are really burned if you're not invested in during it. But if you're investing during it, then almost by definition, it's kind of a contradiction to try to hedge yourself or protect yourself when the thing bursts. It's difficult to do both at the same time. So how are you thinking about that, especially heading after a week where we did see a lot of the AI names, specifically semis, hit extremely hard?
Well, that's a great question. And it really gets to the core of what we coach clients to do. We speak about preparation and not prediction. And that is key because prediction is essentially a fool's errand. We know no more than the next person in terms of what's around the corner geopolitically or what Chinese AI model could completely erupt and sunder the current set of business models that we're looking at today. But when it comes to preparation, there's a few data points I'd like to bring up. One, you mentioned at NASDAQ, there was a small cap company. Small cap is having one of its best years since 2003. So finally, a rotation into small cap, even loss-making small caps. That is really critical. It shows the level of risk that investors are prepared to take on and the level of trust that they have in small cap companies. So every portfolio should have that there. We also look beyond mere sectors such as large cap tech. We would also look at the infrastructure layer, the energy layer, the financing layer. Every single piece of this value chain, there should be exposure to that. And it goes without saying that we also believe in international diversification. So while the US is getting a lot of attention and South Korea got some attention, very concentrated market there, we also like to look at the European stock market. We think there's a lot happening across the Eurozone and the UK, and that it's important to get exposure there. And that will build the resilience, the preparation that really beats prediction any day.
Aoifinn, you mentioned small caps, and we know that small caps, even unprofitable ones, have been leading. Do you think that this is healthy risk appetite, or is the market maybe getting ahead of itself?
Well, there's an element of it needing to put the money somewhere. We know there's a lot of money in money market funds, over 8 trillion. There has been some profit taking, clearly, as you mentioned, the semis last week, and profit taking just across the board in the large cap. So in this type of environment where inflation is pressing, and the need to deliver an important inflation-adjusted return is still there. Investors don't want to be in bonds. They don't want to be in gold. They don't want to be in Bitcoin. They have to be somewhere. So I'd say there's an element of having to spend it there. But it also suggests there is a breadth to markets now, which is so much healthier than the concentration we saw earlier. So I'm going to go with it being a sign of healthy risk appetite and not over-exuberance.
You're sounding a lot like Mike Wilson this morning of Morgan Stanley. He put out a note very similar to that we are starting to see widening breadth. Perhaps part of that is just really high earnings expectations. We saw earnings save this equity market last quarter. We're expecting earnings to grow 24% just this year and then 17% on top of that in 2027. Aoifinn, is that a bar that we can reach or even beat?
It really depends. Clearly, that is an average number, and it's going to be very distorted by these gangbuster earnings that we're seeing coming out of the hyperscalers. Even Tesla is looking at maybe an 18% growth rate. It isn't particularly compelling, and we can see that it's clearly not universal, this level of growth. So that is perhaps a high bar, but I will say that just like IBM has done, there is tremendous managing of expectations going on today, and I think that's really the no surprise doctrine is definitely what companies should be playing, and that will avoid any nasty surprises should they get to their earnings not being at that level of growth.
Aoifinn, I'm going to go back to Danny's question earlier. So if this big tech earnings season disappoints, do you see this as a buying opportunity, or do you see this as a chance to rotate out of the mega cap trade, which has been long crowded?
Yeah, I would say there should be healthy rotation at all times. Profit taking, rebalancing. It's hard to do when the momentum is on your side and all the headlines about the hyperscalers and about the massive demand, this vertical wall of demand that we've heard. But that type of rotation should be happening at all times. Would there be a buying opportunity? Only to the index weight, I would say, not to go overweight in this area. It is prone to uncertainty. As we mentioned, it's extremely difficult to model some of the trajectories. There are so many uncertainties. And even those at the frontier models themselves, who are very close to the coalface here, are admitting that they are dealing with essentially combinations, permutations that they cannot properly calculate. So let's stick with some of the known quantities, which is the demand for, say, compute, the demand for energy, and the demand for financing. Some of those, and healthcare too, some of those sectors that have proven fundamentals.
I mean, banks have done extremely well. I think the KBW Bank Index has now started to outperform, whereas it had been lagging for most of the year. That follows those big bank earnings, so it's up 15% so far year to date. Aoifinn, is that a trade you want to continue to follow?
It would be. I always believe in following the money. And clearly we know that we are running close. We see IBM have talked about choices that have to be made. Enterprises are choosing between hardware and AI today. When we have those choices, we know that there will be an area that perhaps they are running close to the bottom of that war chest. And they will need to do financing. And there has to be creative financing. And we've seen the investment bankers being very creative in this market. They're also benefiting from a high volume of trading, a lot of positive momentum from these individuals with their retirement accounts. So I would say all of that is pointing very much towards the banks. They're not overstretched. They're well capitalized. And I believe it is a very solid sector for the near term.
Yeah, some huge numbers, again, coming from last week. Big beats for the equities trading. Aoifinn, really wonderful to catch up with you this morning. That's Moneta's Aoifinn Devitt. Let's get a check on your equity markets about 8 minutes into your trading day. And we are moving higher, though there are more stocks moving to the downside than the upside, but that's because big tech is doing well. We are up 52 points this morning, 0.7%. Some of the stocks that are moving higher, NVIDIA helping to lead the gains. That on its own is adding 13 points to this S&P 500. That's followed by Alphabet, Broadcom, Micron. So the chip stocks, again, having a good day. Alphabet is up after that information story saying that they are developing more efficient chips to help with the cost of compute and the crunch for it. To the downside, Apple's moving lower, not by a whole lot. Meta, Microsoft, those are all moving lower. Netflix continues to fall after their earnings last week. And some of the more safer sectors, let's say, so consumer staples and healthcare are not having a good day. So it's a decidedly risk-on type of market. You can see that in the sectors. We'll have those up for you just a sec. So yeah, it is staples and healthcare. Those are some of the two worst performing. Energy falls as the price of oil has been bouncing around this morning, and infotech and communication services moving higher again. A lot of that is Alphabet ahead of their earnings, Isabel.
It's really interesting to see, Danny, because last week tech was the biggest loser, and then now, I mean, they just bounced back from.
Yeah, it is narrative ping pong that we're living through.
I like that narrative ping pong. Coming up next, we have the CEO of Airbus joining us live from the Farnborough Air Show as the plane maker gains an edge over Boeing in China. This is Bloomberg Open Interest. Time now for a top call. Some of the analyst action in focus this morning. First up, Philips Securities upgrading Netflix to buy. The analyst seeing an opportunity following the stock's recent sell-off on disappointing earnings. Next up, Stifel cutting its price target on IBM to $235, pointing to the company's preliminary second quarter sales that fell short of expectations. And finally, Goldman Sachs upgrading Urban Outfitters to buy. The bank noting upside to the stock as the namesake brand recovery boosts profitability. Let's stay with the consumer, Isabel, because sandwich chain Jersey Mike's is looking to raise as much as $1.09 billion in an IPO. It's just the latest consumer-oriented company to join the U.S. listing rebound. For more, let's bring in Bloomberg IPO reporter Bailey Lipschultz. Bailey, I mean, it's pretty cool to get a sandwich-based IPO after everyone was so excited about, like, AI. I'm like, cool, real-world stuff is coming to this market.
It's crazy how quickly things shift, Danny, right? We were talking about record-setting debuts for SK Hynix, for SpaceX. Everything around the AI infrastructure build-out had been kind of roaring, and now we're shifting as that fades away into the background into some consumer names. So we do have the launch of Jersey Mike's. We are expecting potentially Cumberland Farms to launch its IPO process in the next day or so as well. So a pair of consumer companies looking to go public at a time where there's still very much uncertainty around the U.S. consumer.
So then how does Jersey Mike's growth strategy compared with other fast food chains? Because you did mention that they don't have as much of an international footprint as, like, say, Subway, which is why maybe that's why I know Subway.
Jersey Mike's is very much, or is only focused here in the U.S. and in Canada, but they brought back and partnered with with the founder of the company to expand in the U.K. So that's been their big pitch from an international perspective, is using their roots to build out the offering in the U.K. We were actually talking on our desk today about, like, okay, Danny, you spent some time living in the UK. Does London really have a sandwich scene? California, where I'm from, doesn't have a deli scene.
It does, but it's like Italian sandwich. You know what I mean?
So
like
Jersey Mike's isn't Italian?
Do they have...
No, but they're like American Italian. It's absolutely different, Bailey.
Do they have sad lunch
No, there are good ones, but they also do have sad lunch. Yeah, there's sad British food. On this, I mean, look, Blackstone has taken this and like run with it. There's so much marketing. They've had Danny DeVito almost not just being a spokesperson for Jersey Mike's, but for Blackstone too. I think he was in their Christmas video. But they've only held this company for less than 2 years, right? I mean, that's a pretty quick turnaround to IPO it.
It's a very quick turnaround, and that's kind of been the pitch. The funny thing is you go back to the acquisition, which closed in January of last year, was, okay, what's Blackstone's strategy? Because this is a company that, for all intents and purposes, could have IPO'd at the time, was the pitch from bankers. Now you bring in Blackstone, you bring in an experienced leadership team, the team that helped lead Wingstop not too long ago. They are pros. When I talk to folks on the buy side, they're excited about this company. The big question comes back to, how does the consumer stand up? Is the international expansion pitch going to come out to fruition? And then the big debate at the end of the day is, it's still a private equity asset. What does that overhang look like?
I love Danny's point earlier that this is one of the few real-world IPOs, because most of the time we talk about, and you've broken a lot of news on SpaceX, Anthropic, and OpenAI. Can you talk to us about the magnitude of this IPO? And maybe just investor sentiment. Like, is it still exciting when it's not related to AI or data center?
It's funny because a year or two ago, if you said there's $1 billion IPO, we all call it a blockbuster deal. Now we have 86 billion or 26.5 billion. This is still, again, with Blackstone selling, with some of the investors selling, targeting a $1 billion IPO. That is still scale. This is a company that the equity value, according to the filing, would be around $8 billion. That's a big company relative to the Kava, which is kind of the best comp that bullish investors like to use because of the growth story. It's still a big company. It's in an industry that, for all intents and purposes, could continue to grow. Not quite as sexy as AI, but there still is kind of a pitch to be made for it.
All right, thank you as always for all things IPO and all things maybe sandwich. Bailey Lipschultz of the equities team at Bloomberg. Thank you for joining us.
Jersey Mike's.
I have not tried one. Let's have a field trip.
Yeah, we'll do a field trip. I like this idea.
Airbus continues to outpace Boeing in China. Fresh orders from Air China and Hainan Airlines, worth about $18 billion, add to the plane makers' momentum at this year's Farnborough Air Show. Bloomberg Guy's Johnson joins us now with the CEO of Airbus. Guy, take it away.
Thank you very much indeed. Yeah, Guillaume Faury is here. He is the CEO of Airbus. Nice to see you.
Nice to see you.
How's it going? Is the demand story looking okay at the moment? I've got a Gulf War that's getting worse. I've got an oil price that's at $90 a barrel. Any sign at this show that consumers are starting to get a little bit more cautious again?
Well, it's the first day of the show, and it started very strongly. We still see a very strong demand for our products. We have a backlog of more than 9,200 aircraft, and we continue to get fresh orders for our short distance aircraft, for the long-range aircraft. The Middle East crisis is actually fueling some demand because price of oil is very high, and fuel-efficient aircraft are in more demand.
Do you like the economy right now? Do you get a sense that what we're seeing at the moment is sustainable? Or are you starting to get a little bit nervous?
Well, it's a very complex economy. It's a very complex world, very fast-changing, very unpredictable. But we have more visibility than others with the backlog we have, with a very strong demand for transport, for commercial aviation, and with defense. So I think given the environment, we can't complain. We have quite a bit of visibility.
So you've got a really big backlog, particularly of the narrow-body aircraft. You'd like to produce more of them, but you're struggling. You've got well-documented engine issues. You and I have joked in the past about building gliders. You'd like to produce at rate 75, but you probably can't. So what rate can you produce at? What are you doing right now?
No, we have a plan to go to rate 75, and we are equipped. We have made the investment, and we have the support from the supply chain to get there. So there is absolutely no doubt, in my perspective, that we'll get to the rate 75. When we look at what we have achieved already in the first half of this year, we have increased by 15%, 1.5, compared to the first half of 2025. So we are progressing well. We are doing what we wanted to do, and we keep targeting around 870 aircraft for 2026. That is very consistent with the rate 75, rate close to rate 75 or at rate 75 for the end of next year.
Okay. I understand. A little somebody told me that tomorrow you're going to have an investor day and you're going to give some pretty aggressive targets in terms of deliveries. If I assume that is correct, that you are going to deliver those quite aggressive targets, do you think you're going to be through the Pratt & Whitney engine issues fairly soon? Like when do these issues, these supply chain issues, finally get resolved?
Well, let's not think that the Pratt & Whitney situation means that we have supply chain issues everywhere. That's not the case. As I told you, we are ramping up. It's the case on all our programs. We have given already targets in terms of rates for the 320, rate 75, for the A350, rate 12, for the 330, rate 5, and for the 220 as well. So we are on the ramp up everywhere, but we are consistent, we're in line with our ramp up objectives for this year, and we intend to continue to stay in line with our objectives. So delivering to our customers.
Let's talk about the story that everybody's talking about here at Farnborough, and that is, when does the next generation of narrow body arrive? I spoke to your friend in Seattle a little bit earlier on. He told me that Boeing's probably looking at the back end of next decade. Guillaume, can you get there first? Can you get to the market first with the next generation of aircraft?
We want to be going to the market in the right timing, when we are ready, when the technologies are ready. We have already said, and we confirm, that we want to launch the next generation single aisle in 2030 for an entry into service in the second part of the next decade. Okay, so that's a bit more than 10 years away, which in our time frame is almost tomorrow.
Yes.
So we are preparing the next generation of single aisle. It will come with a fuel burn benefit of around 25%, which is contributing to what we were discussing at the beginning.
Is that open fan rotor technology?
Well, we have to decide on a number of technologies. We are not at the point of deciding. That will be the next couple of years. And indeed, an important choice is whether we maintain the traditional now gear turbofan, or if we go for an open rotor, which has better fuel efficiency, but comes with other type of risks. So we are assessing those risks at the moment.
What do you think?
We'll see.
Okay.
We have to be fact-based.
Okay. Let's talk about jet fighters. Europe wants to produce a new generation of jet fighters. We have the FCAS program, which you were part of, and we've got the GCAP program. The FCAS program you're no longer part of. When do you join the GCAP program? When are you going to make that decision?
Well, it's slightly more complex, actually. We're still part of the Future Combat Air System. That is more than a sixth-generation plane. But indeed, the sixth-generation plane, as it was structured at the beginning, is no longer there. So we have to find a way forward to the next sixth-generation fighter for Europe. At Airbus, we want to continue to be part of it, therefore your question. But again, FCAS is a broader thing. And the French President and the German Chancellor have decided last week to continue to work together, for instance, on the network, on the so-called combat cloud. That is so important for connecting the different things that will be flying in the air and in space. So FCAS is more than a plane, it's also a plane, and we have to find a way forward. Governments are working on it.
So you're still part of FCAS?
Of course we're still part of FCAS.
So you will stay there. You won't. I'm seeing your good friend over at Leonardo tomorrow morning. Do you think he's talked about the fact that maybe you could join the GCAP program?
Again, FCAS is a broader thing than the sixth-generation fighter. We have to find a way forward for the sixth-generation fighter. It's mostly the decision of governments to decide with whom they want to partner. We will serve that project anyway for Germany and Spain, as we are the industrial partner of Germany and Spain for the sixth-generation fighter.
What do you think about, can Europe rearm without the Americans?
I don't think so. I think the Americans are allies of Europe. Europe wants to rearm. Europe wants to be more self-sufficient, and that's also what the Americans are expecting from Europe in NATO. And when it comes to the industry, we're supporting that effort. So I think Europe is not saying that they will, in the future, do everything themselves in defense, but they want to be able to do more by themselves, and a company like Airbus is contributing to this effort.
The UK's got a new Prime Minister today. What do you think the message should be from this show, from the defence industry, should be to that to Andy Burnham, the UK Prime Minister?
We wait and see, and we'll be discussing with the Prime Minister when the Prime Minister is appointed.
Okay, but do you think the UK, what are the priorities you think that he should be looking at?
Well, the priorities for the UK, I think, when it comes to defence, are similar to the priorities of Europe: better contribution to NATO, to the security of Europe, and the willingness and the ability to work through partnerships. Because defence is an industry that works at the right scale, and obviously the EU needs the UK and vice versa.
Do you think we can get to 5% defence spending?
Don't ask me, ask the governments.
I know, but you're the guy that's going to have to deliver some of that. Do you think...
I think it's really important that there is more money that comes to defence, and that's obviously part of the going to 3.5% or 5%. I think it's important that the money is well spent, and well spent in Europe means working together, collaborating. So we're really calling for collaborations that work when it comes to defense.
Guillaume, it's been a great pleasure, as always. Thank you very much indeed for your time here at the Farnborough Show. Guillaume Faury, the CEO of Airbus. Back to you in New York.
Guy, fantastic interview. Very interesting there with the need for independence when Europe comes to defense spending. Guy Johnson with the Airbus CEO, Guillaume Faury. A check on your equity markets this morning, just about 20 minutes into your opening trade. The Nasdaq continues to bounce after semi's worst week since Liberation Day, heading into a bear market from their high in June. The S&P 500, that's up 0.4% again. That rebound, you can see the Philadelphia Semiconductor Index up just 3%, just under thereabouts. It might be a make or break week with Alphabet reporting on Wednesday alongside Tesla. Brent crude, Isabel, it's doing nothing, which is remarkable given the headlines that we have gotten. We've learned that, one, that they are trying to have mediators step back in and restart negotiations, and that the Houthis are trying to close the Saudis' passage through the Red Sea. And yet, Brent's doing nothing.
Headline ping pong, or headline whipsaw, as you said earlier, is really the definition of today's market. And I know we get big tech earnings next week, but I also know that we get the entire economy, because we also have Apple, we have GM, we have a lot of AI companies, Tesla, IBM. So it's going to be an exciting week, and I'm excited to be here with you, Danny.
Well, I'm thrilled for it, Isabel. Speaking of which, in the next hour, Isabel and I are going to be speaking to Nomura's Andy Goldberg. He has his mid-year outlook on deck for us to discuss. We're also going to speak with Partner Group's Esther Peiner. She has just raised a new infrastructure fund that beat out their last one, plus the CEO of ADI on demand for commercial and residential security. All of that to come, plus a metals conversation to round out the hour. This is Bloomberg Open Interest. We are 30 minutes into your trading day. Welcome to Bloomberg Open Interest. I'm Danny Berger alongside Isabel Lee for the week. And we have a rebound on our hands after a huge drop for these equity markets and semis last week. Coming up on the show, China's Moonshot is reshaping the AI race just as big tech heads into a critical earnings season.
Meanwhile, all whipsaws as traders weigh a possible ceasefire against escalating tensions in the Middle East.
Plus, a $15 billion bet on infrastructure. Esther Peiner of Partners Group will be joining us for an exclusive interview. But first, we start with China's disruption in the AI trade. Peter Scheer of Academy Securities weighed in on Bloomberg surveillance.
I'm wondering if what we're starting to see is just a flood of cheap compute, right? Is China going to flood our markets like they did with trinkets back in the early 2000s? Have they built up enough compute? It's not as good as ours, I don't think, and they distill it from our models probably, which helps on their costs. But the reality is they have the electricity grid, they have enough chips, and they seem to be able to flood our market.
Joining us now is Andy Goldberg, Chief Investment Strategist at Nomura Asset Management. Andy, great to see you. And Peter Scheer making the point there, like we've seen this before, China has flooded our market with cheap goods, and it's been to the detriment of American companies. Considering the AI trade is so hugely important, not just for the stock market, but for the economy, do you get worried when you see headlines like Kimi K3 or whatever, that it's really advanced and it's much cheaper than what American LLMs are putting out?
Well, one of the ways to address that, if you're worried about it, is to invest not just in the United States, right? But yeah, I mean, I think that's what there's going to not expect disruption in the thing that's disrupting the whole entire world would be crazy. So what we've been talking to investors about is how can you be diversified enough? So far, semis were down, call it 20%. They're in bear market territory. That dragged the S&P down 1%. Like, we can stomach that. And so, yeah, there is a lot of concern. Like, investors have to be careful, but really well diversified when they play this game.
So how do you play that diversification? If AI is still the big theme, where do you go other than hyperscalers?
Yeah, absolutely. So for a while now, we've been diversifying away from some of these hyperscalers, which is good. By the way, the best news for us so far is that this year, the big hyperscalers are kind of flattish, call it, even on really good earnings, but they're kind of flattish. The rest of the market's up, and there's been some broadening. For example, we're looking at small caps. There's more than just the AI trade happening there. So, for example, the economic data has been pretty strong. The one big, beautiful bill, which is like a great name, is it's having a real impact. We are estimating it's having about a 1.1% impact on GDP growth. When you look at different measures, like, for example, ISM manufacturing and how that's been going, that tends to lead broadening. It tends to be a really good leading indicator of small caps doing better because a rising tide, the broader economy lifts more boats, right? We also see metrics like the equal weighted S&P 500 outperforming the cap weighted index. And so all these like cyclical areas of the economy are great places to be looking, whether it's, financials, you can look at healthcare, industrials. You don't have to be just crowded into tech.
But we are very crowded into tech.
And
this is something HSBC's Max Kettner flagged, basically saying that it looks like we're primed for a sell-off just because of that crowd. I mean, I guess we've already kind of gotten a sell-off, but maybe we're primed for further pain just because of how long this market is right now. Do you see that positioning risk too?
There is. So, and that's, we talked about this right before this came on air. There has been a lot of built-up positioning, and there's also a lot of options contracts. There's some leverage. And so you're going to see some fits and starts at this point. You've also seen strong earnings from some of these companies, and the market just kind of look through that because a lot of positioning is already built up. And that's just like an okay part. By the way, some of these companies are up multiple 100%, 1,000%. Taking a breather is actually a healthy sign. And the fact that it's been happening underneath the surface without major, bear market territory for the S&P is that's good news so far.
Can I just ask, because I feel like your job is especially difficult in environments like this, because you want to be able to say to clients like, look, there is risk, there's a lot of positioning built up, maybe it deflates, but then there's also this career risk because you can make a lot of money chasing it to the upside.
Yeah.
But then the downside, if you do that, is quite painful. How do you strike that balance?
Thank you for recognizing the challenges that we face. No, it's, we advise, so our main client base at Nomura Asset Management, we're talking to financial advisors and institutions who have very long-term goals. I almost view it as, it's kind of like golf where I'm not trying to get the ball right in the hole in the first shot. Every time we just smash it in the right direction, right? And then fine tune over time. So for us right now, we're making sure that portfolios stay balanced. And if the market reallocates from your, strategic allocation without your consent, too much, you've got to start to chip away. And I know there's tax implications to rebalancing, but you have to have good portfolio discipline and hygiene, and be taking some money off the top, redeploying it. And look, you always want to be invested in the stuff that goes up, but by definition, in a portfolio, you also want to hold stuff that's not correlated to everything that's going up, because if you do, when things go wrong, it goes really, really wrong. And so that's why, so we've been talking about, again, people have to rethink about, what do they have in fixed income? It sounds boring, but I really mean it. The other one that we've been talking a lot about, what is the correlation, for example, of, film royalties to the AI trade? There is none. So private credit, we're finding really diversified ways to get yield into portfolios without having to be tied to this big trade. And that's how investors should be thinking today. They already have all the exposure they need to this big tech and AI trend.
And ahead of the earnings seasons, we know that we'll be hearing a lot about AI and Capex. Is there anything that you're going to be looking out for? I mean, how much of this will you look at the forward rather than the quarter that just ended?
It's a really good question. So this week, there's not a lot of macroeconomic news. It's all about earnings. So it's something like 17% of S&P 500 companies report, including Google this week. What you're looking for, and what I think everybody's focused on, is that Capex discipline still in place? Or are you going to start to see some of these big hyperscalers say, oh, you know what, I'm actually going to cut back some of my Capex spend in the future? And that's what people are on edge about. Again, my guess, back to that golf metaphor, where the market doesn't get it right the first time. They sometimes overswing or overbuild and then scale back. So there's bound to be some volatility now at this stage in the cycle as people figure out how much longer does this build out go on. And so people are going to be looking at these Capex expectations.
I will be using the golf metaphor soon, so thank you for that.
I feel like it's good because I feel like every financial advisor plays golf. So I feel like they get it.
A lot of them play golf.
Do you play golf? I don't play golf.
Poorly, yeah.
At least you do. But thank you. We wish we had more time with you. Thank you for stopping by.
Thanks for having me.
Andy Goldberg of Nomura Asset Management, thank you for joining us. And turning to the Middle East, oil is swinging as traders weigh a barrage of headlines pointing to both escalating tensions and renewed efforts to pause the fighting. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Tyler, what is the latest after all of this headline whiplash we're seeing?
Yeah, hey, Isabel. Well, at this point, it appears that we could have another potential supply disruption out of the region, this time in the Red Sea, as we got this statement from the spokesperson for the Iranian-backed militia group, the Houthis, saying that they will institute a maritime blockade immediately against Saudi Arabia, which has the potential to have some pretty big impacts here, considering we know Saudi Arabia has been utilizing that east-west pipeline to get their supply to market via the Red Sea to the tune of about 4.5 million barrels per day since the conflict began. And at this point, observable traffic in the Strait of Hormuz appears to be at a near standstill amid a new analysis of satellite imagery by Bloomberg News earlier today, which also extends to now ships that have been transiting through with their transponders off, being a potential target of Iran. The IRGC said over the weekend that they halted at least 4 vessels that were not broadcasting their location. It's very evident at this point that Iran isn't giving up its leverage when it comes to the Strait of Hormuz. We got this statement out of Iran's foreign ministry earlier today saying that the country will, quote, fully exercise its sovereignty and prevent any security threats in the Strait. Though in that same statement, they went on to say that there was movement in the diplomatic apparatus over the weekend. And Danny and Isabel, we saw this reporting that there could be a 10-day ceasefire put on the table. The U.S. Secretary of State Marco Rubio did say over the weekend that the U.S. has gotten very strong indications from Iran that they do want to negotiate, but that there is a very strong split emerging between the hardliners that want to keep the fighting going and the more moderate members of the Iranian government who may be more willing to make a deal.
Tyler, thank you very much for that update. That is Bloomberg's Tyler Kendall in Washington, D.C. A check on your markets this morning about 40 minutes into your trading day. Oil going a whole lot of nowhere despite that back and forth. We're just hanging tight at $88 a barrel. The S&P up 1/3%. NASDAQ outperforms. You can see the reason right there. We're getting a rebound from the semiconductor index up 2% after the index reached a bear market in about a month's time. The high was just in June. Some of the single stocks that Isabel and I are looking at this morning are the chip stocks looking to rebound after booking their worst week since Liberation Day last week.
That is, I mean, when was Liberation Day? Last year, April, right?
Yes.
I feel like
time is meaningless to me. I had to think about that.
Time is a human construct, but we have Google reportedly working on a new server chip to boost efficiency of its AI models. The company gearing up to report earnings on Wednesday.
You like the name, right? Freeze?
Is it Freeze? Frozen.
Frozen, yes,
what?
Frozen.
Frozen.
Do you think it's related to the Disney thing, or?
I wish it is. I want to be
so.
Elsa. So.
Yeah, we can all sing "Let It Go" from the rooftops as we use Google's Gemini. We're also watching shares of Boeing. The CEO telling Bloomberg's Guy Johnson that the company is turning a corner with regards to supply chain hurdles as it ramps up production. Still a long timeline to get its next jet out. Shares falling 1.7%.
And coming up, Partners Group's head of private infrastructure, Esther Peiner, talks to the $15 billion raised from the firm's new infrastructure vehicle. This is Bloomberg Open Interest. Now to high interest, a look at what's making headlines around the world. Andy Burnham has officially become Prime Minister of the UK after meeting King Charles III. In his first speech after taking over the role, Burnham pledged to end the UK's political instability with a new economic model.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support.
And the Miami metropolitan area is more expensive than Greater New York City for the first time on record. This is probably good news for residents like Danny and me. Figures released this month show South Florida's CPI has jumped 36% since 2019. That's more than any other metropolitan area tracked by the U.S. Bureau of Labor Statistics, with the exception of Tampa, Florida. And for the World Cup fans there, Spain defeating Lionel Messi's Argentina 1-0, taking home its second World Cup title. Substitute Ferran Torres scoring the only goal of the game in an extra time before 80,000 fans at the MetLife Stadium in New Jersey. President Trump and FIFA President Gianni Infantino presented the trophy to the Spanish team. I actually have a friend, Danny, who attended, and he said it was really just indescribable, the moment of cheer.
It better, because he probably had to like sell a kidney to get tickets. It was so great to see the world come together and unite in their hate for Argentina. It was a beautiful thing. Elsewhere, let's move on to more serious matters. Partners Group raising more than $15 billion of new commitments for its new infrastructure fund, the vehicle 50% larger than its predecessor. Esther Peiner, head of private infrastructure of Partners Group, joins us now. Esther, first, let me say congratulations. This is a pretty chunky fund. I did want to ask, though, we'll talk about the strategy in a moment, but the fundraising itself, I know there's been a lot of headlines around Partners Group, specifically about your Evergreen fund. This was obviously mostly closed-end, mostly institutional, a little bit of that kind of more wealth evergreen offering in it. I just wonder if any of those fears made some of the fundraising more difficult for you in this period.
Thank you, Danny, and thanks for having me. I think importantly, as you can tell, 15 billion, significant step up for the prior vehicle, quite a successful fundraise, and given really the distinct nature of infrastructure and the underlying resilience that we can demonstrate with our investments, the broader evergreen momentum in the market hasn't really impacted our fundraising to any discernible nature, no.
So when it comes to the strategy itself, I thought it was interesting that you basically noted we have this massive concentration of capital flooding into AI, which means maybe other parts of this market are attractive and getting less attention. So how are you seeing the split of this fund in terms of what you're investing in? How much is in the AI ecosystem and how much is elsewhere?
Yeah, thanks. And for this particular strategy, we've already got 11 seed assets in the portfolio today. And the majority of those are concentrated either in parts of the infrastructure universe that support not only the infrastructure trend, but industries more broadly. So a lot around power generation, grid resilience, and overall just a more sustainable energy infrastructure. And that's super important. I think we've also heard over the weekend and early this morning with quite a lot of the volatility, in particular around the Middle East again coming up and bringing energy security back into focus. And I think then importantly also, as you say, a lot of the capital being concentrated towards the AI build out, that leaves some other parts of the infrastructure universe, overall about $1.5 trillion of investment needs in the coming decades, really ripe for private capital investing.
Esther, a big issue in private markets is that many private equity funds can't distribute cash to their LPs because of a lack of exits. Do you see the same in infrastructure funds?
So infrastructure funds do have the benefit that often investments can pay a running yield. So that makes the necessity for exits as the only way by which capital can be returned to investors a little bit less pressing. I think a second aspect is also that within infrastructure, the ability to exit is a little bit less correlated to maybe the overall private market universe. So for example, we were able, despite some of the market volatility, successfully exit quite a number of our investments over the past 18 months, including a couple of months ago, our data center investment at North. And that was despite, again, at that time, there being some instability in the market, but it's really where infrastructure can help diversify against the broader private market investments.
There have been some notable exits as of late. Just last week, we had Carlyle on the show who talked about their exit to EQT that they said returned something like 5.5 times X. It was interesting, though, the CIO rather of infrastructure joining us basically said, look, we really like mid-cap, and, I understand that people always like to talk their book, but even so, she said, we really like mid-cap, because on the larger cap side of things, especially around AI, things just look frothy. Esther, are you seeing the same thing, that there's just a lot of froth and maybe too high valuations out there?
I think rather than looking at it from a negative perspective, I'd rather look at the positive element of a mid-market and diversified mid-market strategy, which is exactly the place in the infrastructure market where we invest in Partners Group. Again, if you have, in our vehicle, 15 billion raised altogether, but across 20 to 25 investments, that really allows you to identify not only where the interesting thematics are, but particular investment opportunities that offer some room for entrepreneurial scaling and entrepreneurial growth. And that, again, is offers you a much broader universe of infrastructure assets to invest in and ultimately drive a much better risk-return outcome.
Esther, you said 40% of the program is already committed. What's your goal for when you expect to have deployed all of these funds?
So looking at the current investment environment, again, we turn down about 98% of all the investments that we screen. So typically we make around 6 to 8 control investments per year. So we would then look to complement the portfolio build out of that fund by late 27, early 2028.
How are you seeing about the opportunity when it comes to different geographies, especially when it comes to power and data centers? Esther, here in the U.S., we are experiencing a real political backlash. New York City, or the wider New York area, for example, has banned new data center projects for now. Northern Virginia, which has seen the bulk of data centers in the United States, also has a lot of NIMBYism going on. When you're looking at opportunities, are there a lot of political risks that you're finding yourself navigating?
I think investors in infrastructure for decades now have navigated political risk and regulatory complexities. I think, interestingly, as we take a particular look at the New York situation, that actually does highlight the need for agile private infrastructure investing. And for example, one of our portfolio companies in the current program, Power Transitions, looks to address exactly that shortage that has triggered some of the recent discussions and this moratorium around data centers, which is really quite a lot of demand load on the New York grid, not just due to data centers, but also broader reindustrialization of the New York State area. And we have, with Power Transitions, about 1 gigawatt worth of dispatchable energy that's ready to firm up the grid at any time. But alongside that, we're also now co-locating battery infrastructure, solar infrastructure, about 600 megawatts in total of that, to really bring additional generation to that same grid connection. So rather than waiting for 4 to 5 years for new grid connections and completely new development to come online, here with the scaling and capacity enhancement of existing infrastructure, you can really help address some of these very, very pressing needs. And we see that in New York, we see that broader in the US power systems, but we also see that elsewhere around the world, and that ability to take learnings from one geography, one particular region to another, and ultimately, on behalf of our clients, pick the best possible risk-return combination. I think that's, again, an underpinning feature of our global diversified strategy.
Esther, we're going to have to end it there. Thank you so much for joining us. That's Esther Peiner of Partners Group after their fundraise. Still ahead, we're going to speak with Rob Aarnes, CEO of ADI, a home fire and security product seller. His company is spinning off from the parent company in just about a week or so. That conversation coming up later. This is Bloomberg Open Interest. Welcome back to Bloomberg Open Interest. You are about an hour into your trading day as stocks holding on to gains after last week's decline, where we fell by more than 1% for the S&P and for the NASDAQ. For semis, it was even worse, their worst week since Liberation Day, as they fell into a bear market after their June high. Russell 2000 small caps slightly lower, Dow Jones also slightly lower. Brent crude also slightly lower, which is maybe a head scratcher because the latest development that the Houthis are now trying to stop Saudi vessels going through the Red Sea. For many, this was floated as a clear escalation. Even so, again, Brent crude not doing a lot. It's going to be an interesting week. We're going to get Google earnings along with SK Hynix. So for now, we're seeing that rebound in the semis, but a lot is at stake with these earnings. What they say about Capex and how the market reacts to it is going to be very interesting. Again, Micron, Nvidia, all those are up. As are AMC and Domino's. Both of them had earnings. AMC has had a great run of it. Everybody going to see Odyssey this weekend, especially in New York, as we got rained out. Domino's, those sales looking pretty solid too, so the consumer holding up in those earnings. Coming up after this commercial break, we're going to speak with ADI CEO Rob Aarnes about the demand for commercial and residential security. You're watching Bloomberg Open Interest. ADI is preparing to spin off from Resideo next month. The company distributes everything from security systems to network equipment for homes, commercial buildings, and data centers, giving it a front row seat to construction and technology spending. Joining us is President and CEO Rob Aarnes. Rob, thank you so much for joining us, and early congratulations for the spinoff coming up in about 2 weeks' time.
Thank you very much.
I would love to first just know the thinking behind that, because I guess Resideo, they make some physical products that are very related to the home. So I think the stock, and thus you, has really been treated as something related to homes and home building, which obviously is kind of in the doldrums. So do you just get your like full potential to show to the world you do more than just residential?
That's exactly right. We're in a great opportunity here to unlock what I would call intrinsic value of the organization. We've always been, I've been here 15 years, and if you go back since the time I got here, or even well before that, we were always a segment in a part of a manufacturing company, right? We were with Honeywell for a long time, then we spun out, we're part of Resideo. We were never really able to unlock our full potential, set our own strategic priorities, invest capital the way we wanted to drive the highest return for a pure play distribution business. And we finally get that opportunity.
So security has been a huge part in this AI world.
Mm-hmm.
AI has been a huge part of security, rather. So I don't know why I switched that. Do you see that in the way your customers are buying your products?
Absolutely. In fact, one of the beautiful things about the commercial security sector is demand is driven by technology and not necessarily need for construction, commercial construction. And so as AI has really proliferated a number of our products like video surveillance, there is a need for institutions like banking, retail, the verticals that our integrators play in to protect their patrons, their patients. And so there's some really neat stuff out there that's raising the level of security for those folks.
The other thing that we've seen for AI is just this huge demand for memory. And I mean, you see it in Micron earnings when they're like, we have margins of 86%. Apple has had to raise the prices of some of their hardware. Microsoft's Xbox has. I know you kind of see both sides because you're both buying and selling. Are margins getting difficult for your products too? Because I'm assuming they also contain a lot of chips and memory devices too.
About 75% of our products contain chips and memory, right? And look, the beautiful thing about being a distributor is when we have 1,000 suppliers, when we get price increases from them due to things like memory or the tariffs last year, we tend to pass those prices through. So from a margin perspective, we don't see a lot of issues.
By the way, what has been more impactful, what you're seeing from AI or the tariffs in terms of rising prices?
Without question, last year the tariffs that came into the period following Liberation Day, where thousands of our SKUs were affected, day by day, and we had to really stay on top of it, because if we didn't and we weren't able to pass those prices through, then it would have been a margin hit for us. But we were able to react really fast.
Danny made a good enumeration of all the products you sell earlier. Do you notice that consumers are becoming more price sensitive? Because I imagine if your products are becoming more AI driven, they're becoming more pricey too.
It is true. But I would tell you that most of the verticals where our integrators play, important to note, we sell to professionals, installers, not to consumers or end users. And when it comes to safety, security, being connected, in a lot of cases, price is the last issue on the list. Safety is paramount, and we need to make sure that we need to make sure that we're delivering the right products at the right time so that everybody stays protected. So pricing really hasn't affected demand in this channel yet.
Have your suppliers changed their supply chains a lot? I know we're also waiting for this Friday, the Section 122 tariffs expire, and everyone's saying, okay, Trump's going to be able to impose a lot more tariffs. Have they kind of navigated around that, or is the industry bracing for what happens on Friday?
In all honesty, they've had a year to prepare, right? They had a little bit of the chaos from last year. They know what to expect. They've enhanced their supply chains. And from a demand perspective, we have great relationships with our suppliers. We're very integrated into their supply chains. So we have not seen a real threat in terms of not having inventory to this point. They're doing a great job.
And when you look at the second half of the year, what gets you more excited? Is it commercial real estate, your infra spending? What is it in your part of the business?
I think it's just like I said earlier, it is this continuous advancement of technology which drives the end market demand for us. Our suppliers, I love them because they are feverish about introducing new technology every 6 months, multiple times a year. That actually drives demand. So if you think about it, our products are all over this building, this room right now. Not uncommon for all of this to have been installed 2-3 years ago, because technology advances and now there's ways for a building like this to better protect its people. Rip it out and replace it, regardless of any kind of need for a renovation or new commercial construction.
I was just saying we had a full screen of the list of where your tech was being used in the World Cup. What were you doing for the World? I hope you weren't behind the VAR technology. If not, you and I need to have a conversation.
No. That's funny you say that. But if you think about MetLife Stadium, rooms like this, MetLife Stadium, we are everywhere. Now, not ADI branded product, but the 1,000 suppliers that we actually, sell to our integrators. Think about that stadium, all the safety, the fire systems, the jumbo screens that, people are watching the game on, the commercial audio, the acoustics. We sell all of that.
So also for MSG for Taylor Swift's wedding.
Yes, exactly. Yes, exactly right.
I love that. So, okay, I know that like this spinoff also unlocks value, and you're not just about the home. Obviously, though, home products are something that ADI technology has been used in. How are you seeing that demand? Because less homes are being bought. After COVID, there was a lot of remodeling. I wonder if some of that has slowed down and how you see demand at this moment.
That's a really good question. So we've been talking about the commercial side. We're 70% commercial, 30% residential. I talked commercial side, end market demand is driven by technology advancements. Residential, exact flip-flop. So highly dependent on new and existing home sales, renovations. And when you think about our particular space in residential AV, you know, that's entertainment. And it's an experience buy, so disposable income is needed. So it moves and flows much more so with the residential housing market. Residential security, on the other hand, is a little better than that, not as affected. But the AV space certainly is. So we've had to navigate around that.
Super interesting. Rob, thank you so much for joining us.
Of course.
Please come back again. Again, looking forward to seeing you ringing the opening bell on August 4th.
Thank you very much.
ADI CEO Rob Aarnes. Let's get a check on your markets this morning. Over an hour into your trading day, and the rebound continues. Not enough to make up for last week's loss, where we saw the semiconductor index see its biggest weekly loss since Liberation Day. It's up 2% this morning, and Brent crude continues to drop at about 1/3%. A look at some of the single stocks that are moving this hour. We heard from Domino's reporting earnings. Second quarter revenue beat estimates, even as comparable sales growth hit a one-year low.
And AMC reporting strong earnings for the second quarter. The opening weekend of Christopher Nolan's The Odyssey, seeing 4.3 million people heading to the movies. That doesn't include Danny and me. We both haven't watched The Odyssey.
I can't believe I said Oppenheimer.
They're both old, and they're both by Christopher Nolan.
Thank you. That makes me feel a lot better.
It's Monday.
And it's Monday, and they're both like 3 hours long.
Yes.
Also on that note, we've also been looking at shares of IMAX this morning. The Odyssey is the first movie to be filmed entirely with IMAX cameras, driving a large portion of this weekend's box office performance. Speaking of which, don't miss an interview with the company's CEO, Rich Gelfond. That will be at 4:30 p.m. New York time, Isabel.
And coming up, we'll hear from Boeing CEO Kelly Ortberg as the plane maker maps out its next generation jet. This is Bloomberg Open Interest. Boeing says its next generation jet is still years away. Speaking with Bloomberg's Guy Johnson at the Farnborough Air Show, CEO Kelly Ortberg said the company isn't ready financially to launch the aircraft. He also weighed in on the company's turnaround plan.
We haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong, so our backlog is very strong. So our story is really focusing on executing that backlog.
Okay. The administration, the White House, has given you massive support over the last 18 months. The president certainly had your back. Do you think the company would be where it is now, that kind of progress that you've made, without that kind of support?
Well, I think the execution focus is really on us to go improve our overall performance, build trust with our stakeholders, restore trust with the regulator. And I think that's more what Boeing has done for themselves. The president has been very helpful in sales campaigns. Balancing trade, the best way to do that is buy a bunch of airplanes. And so we've been a beneficiary of that. He's been very helpful to the whole aerospace industry.
So you're in a good place right now.
Yes.
So what's now?
Well, we still have to ramp up higher. So we're at 47 a month now on the 737. We have aspirations to get to 63 a month rate. We're at 8 a month rate on the 787. We want to go to 10 later in the year and then higher next year. So we're investing in new capacity, new facilities, so that we can continue this rate ramp. The backlog is there. The market is strong. So it's all about delivering more airplanes.
You say the backlog is there, the market is strong. You like the economy right now? The consumer looks good, particularly in the States. The consumer wants to fly. The airlines are certainly saying that. But you've got Brent this morning at $90 a barrel. You've got the ongoing conflicts with Iran. Kind of just give me your flavor of what you're seeing in front of you in terms of what the macro picture looks like.
It's a super resilient market, and while we always see perturbations here or there, regional perturbations, which we're seeing now, we forecast that the market's going to continue to be strong. Traffic continues to grow. We just came out with the new forecast for overall aircraft growth, and we see 44,000 airplanes in the next 20 years. So this isn't a market that moves quickly, because you have to make orders for aircraft well in advance, and we think that the demand is set for our aircraft going forward.
One of the things that's certainly driving the economy right now is the AI boom.
Yep.
A lot of money's being spent.
Yep.
Do you think it's going to be worth it?
Oh, yeah, I do. AI is critically important to us. We're working with AI to either improve our back office processes, help us with our design processes, whether it's software or hardware designs, and also embedding AI capability in our services and our actual product going forward. So I think AI is going to really change the way we do our work, and hopefully we can go faster and provide better products as a result of the AI.
One of the things that often goes hand in hand, is with the AI story is the robotics story, like advanced robotics. It feels like Boeing is a perfect place for maybe that advanced robotics to find a home. What do you see in the future for that? Can you build airplanes without people? What impact is it going to have? What does it do in terms of your ability to manufacture?
Today we use robotics to help us build the aircraft, but the real opportunity to really utilize robotics is going to be when we go to a next aircraft, because in many cases you have to change the design to allow for the automation, and I think that the real step function in automation will come with the next generation aircraft.
Okay, we'll come on to when that is in just a moment.
Okay.
But in terms of how you utilize that, how much of the aircraft do you think you can build? Like how automated do you think this process could be?
I think we can make a step function in automation. Depends on what particular area of the aircraft, but certainly we can automate the whole assembly of the aircraft in a big way.
Okay, you bring up the issue of the next generation of aircraft. When am I going to see it?
Don't know yet. The market is not quite ready for the new airplane. The customers are telling us, let's focus on the existing product. We'd like to see better durability of that product in the marketplace.
Yep.
And as I mentioned, we've got big backlogs, and they're looking for us to deliver on those backlogs. We are studying a new airplane, and we'll be ready when the market's ready.
So this is the replacement for the current 737.
In that family,
kind of the narrow body kind of end of the spectrum. Your friends in Toulouse think early next decade. Do you think that's a little early?
I think the market will tell us what the right timing is. That it's not today. Whether it's the end of the next decade, we'll see.
Okay. Are you in a position now that you could make that happen?
Probably not now financially. I'd say we need another couple years as we ramp up our production, improve our positive cash flow, and pay down some debt. And that's our plan, and we're accomplishing that plan. So in a couple years, we'll be ready to take on that challenge.
That's Boeing CEO speaking with Bloomberg's Guy Johnson. And we're going to have more from the Farnborough Air Show tomorrow. We're going to hear from the GE Aerospace Chairman and CEO Larry Culp. That will be right on this program at 10:30 a.m. New York time alongside Bloomberg's Guy Johnson. Coming up, Nikki Shields of MKS PAMP says that precious metals have moved from euphoria to reckoning. She's going to be joining us next in your Metals Spotlight. This is Bloomberg Open Interest.
It's time now for a metal spotlight. Gold steadying after escalating U.S.-Iran clashes over the weekend were followed by reports of mediation efforts. Traders are also assessing the likelihood of a Fed rate hike to contain inflation. Joining us now is Nikki Shields, Head of Research and Metal Strategy at MKS PAMP. Thank you for joining us here in person. It's always such a delight. So, Nikki, how much of the precious metal story is about the geopolitical headlines we're seeing, the Fed, the markets?
Yeah. I mean, you put it really well. It's geopolitics versus macro, right? I think oil has basically stolen a lot of that geopolitical premium from gold, with obviously the 6-month-long now war ongoing. Any kind of escalation, and we get a higher oil price regime, it is just accelerating that higher for longer hawkish Fed rhetoric, which then is basically suppressing gold, just a couple headwinds that gold has to contend with. But again, we went from, let's call it a 1 in 100-year event in Q1 this year. So it was a little overheated. It's come back down. We still believe the secular trade is there. It's just simply taking a bit of a breather, and it's going to work through some of these headwinds and get back to fundamental floors.
I do really like that you put it from euphoria to reckoning. I really like that idea. So how do you sort of distinguish the sell-off that we've seen, that it is just a healthy market correction versus the end of a bull market run? How do you distinguish the two?
Well, for one, looking at participants, right? And the fact that we talk about central banks getting involved in gold really has accelerated since the 2022 sort of Russian invasion. They're not going anywhere. We looked at China's numbers over the last 3 months. They've really accelerated their gold purchasing program. For them to just get to 30% of a gold allocation, they have to repeat June's monthly purchases for 33 years. So it just, you then take a step back and this is secular. We have major secular themes, de-dollarization, debasement, and diversification coming into the gold space.
Are tariffs and trade tensions creating distortions in the precious metal market?
Yeah, for sure. That was definitely the theme du jour of 2025. It's sort of more contained into the copper market at the moment. But what it has done is sort of driven this idea that we're not going to have global pricing or sort of global S&D. It's going to be very regional. You get fragmented trade distortions. Certain regions are trading at either steep discounts or premiums. So it really has driven this idea of strategic stockpiling across some of your more rarer, more critical metals like silver and PGMs.
So we're not doing the thing where we're stocking airplanes full of gold bars anymore, flying them from London to New York, right? That thing's over.
Yeah.
Which was a fun. It was a fun story, all things considered. One of the things you also point out is that we've just gone through years of underinvestment and really in the supply of this. And I wonder, when we were seeing gold and silver and these other precious metals hit their peaks, if that restarted any of the production, or if we're still underinvested as we stand here today.
The underinvestment theme is there. It's not getting any better. For the past 10 years, you've had capital move into tech, move into other industries, and again, you can't start a mine overnight. So, a lot of these critical metals are sitting in deficits because primary mine supply just hasn't really ramped up.
Gold was a huge story earlier this year. I feel like almost every day it hit a new record. Any catalyst that you think will push it to a new record, if that's even sustainable?
Yeah, I think it really is tied to that debasement trade, which was really sort of in vogue in Q1. That sort of died down. So I think if we're going into the second half of this year, I think any slowdown in U.S. economic data, any weakness in the U.S. dollar, and a return of debasement or fiscal dominance around those narratives, if they come back into the market, I think you'll get a resurgence in investor demand for sure.
How are you thinking about it in terms of inflation staying sticky? The Fed, not yet talking about hikes, but we still are getting some hawkish language from them. The market is pricing in at least one hike this year. How are you viewing the rate path and how that's going to be affecting the precious metals?
We don't think we'll get a hike this year. Look, you can't have a U.S. An extension of war, sort of higher rates. You simply can't afford that. But I do think the inflation narrative it's very tricky for gold. You have to sort of decipher whether that Fed is ahead or behind the inflation curve. Right now, there's a lot of Fed uncertainty, especially around the task force and what they're going to do in the second half of this year. So I think, again, that's putting a little headwind into the gold market.
If the U.S. economy slows in the second half of the year, which precious metal do you think will benefit the most? Gold, silver, palladium?
I think if the U.S. economy does slow, which we'll see then a weakening of, so that sell USA theme perhaps comes back and you get a weakening in the U.S. dollar. Traditionally, silver's been better correlated to a weaker U.S. dollar, so I think silver can sort of outperform in that scenario.
I would love if we could just end this by circling back to the debasement trade, because to your point, we did see a lot of central banks starting to buy gold. I wonder if that's exacerbated by the war in Iran. When Iran, for example, was talking about tolls coming through the Strait of Hormuz, Bitcoin was floated as a way to pay for those tolls. Has the war in Iran amplified those discussions of perhaps U.S. dollar supremacy starting to ebb?
Yeah, absolutely. I think it really has accelerated that de-dollarization theme, which central banks, they came up with a survey. Increasingly more central banks are looking to hedge their dollar exposure, hedge the exposure to the U.S. or just to Western powers. So I think any war, any sort of geopolitical uncertainty is absolutely going to drive that de-dollarization narrative.
All right, Nikki, we're going to have to end it there. Thank you so much for joining.
you.
Great to see you in studio, Nikki Shields of MKS PAMP. Let's take a look at what is ahead for markets this week, because thankfully it's a blackout period from the Fed, so no Fed speakers, but it still is a busy one. Tomorrow we're going to get earnings. GM will report, and Matt, away on his paternity leave, I'm sure is sad he's missing this one. Wednesday, big tech earnings are going to be kicking off results from Google and Tesla. Isabel, it's all about Capex for Google. That will be really interesting to see how the market treats it.
And especially in light of these Chinese startups that are really powering a lot of these new AI models that are cheaper and more efficient, so they say.
It's a really good point. Does that essentially upset the thesis for all the spending they have? We're also going to get an ECB decision on Thursday. Then we'll have Intel, American, and Southwest Airlines all reporting earnings. And then finally on Friday, President Trump is set to attend the rescheduled White House Correspondents' Dinner. I forgot this was happening. Hopefully it is safe, and I'm sure security is very much so ramped up. Isabel, a quick check on markets as we head to the close. I believe we're still rallying after that big semi-wreck from last week.
I think it's interesting to see us rallying, especially after that awful day, but it just shows that I really love what you said, headline ping pong. I think that's what we're going to see this whole week, a ping pong of all those headlines. See, it's green on the screen, S&P higher by 0.1%, and NASDAQ up by 0.5%, Danny.
And Brent crude doing a whole lot of nothing. Coming up on tomorrow's show, we're going to speak with Ben Snyder of Goldman Sachs. Daniel Poli of Oak Tree Capital will be joining us for a whole hour. Mark Pinto of Moody's, and GE Aerospace CEO Larry Culp. That's all coming up tomorrow. In the meantime, thanks for joining us. This is Bloomberg Open Interest.